Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Wednesday, July 17th, 2019. All right, not a big day today in the market, but we're starting to get some traction a little bit to the downside. You can see this is that trend line on SPY, and today's candle, we're clearly below, and we have again, nothing big, 0.65% drop, but the biggest candle we've seen in a while, and these losses are being built upon in the after-hours session. These are regular. This is a daily chart, so that shows today's close in SPY. So that's it. You know, we've broken those wedges, and I'll get to the futures charts in a second. QQQ still has a little bit of work to do with breaking down below this 190-144 level, but I'm going to get to the futures charts here in a second because that we're getting a little bit of activity in the after-hours session thanks to Netflix, and I don't know, maybe IBM's reporting to eBay. That's, like I told you guys, it's a big earnings week, and to me, this market's just, you know, this correction's been priced in for a long time. I used an example today. I did a trade idea video and covered some sectors, and I'll just touch on this one. For example, the transportation sector just got clobbered today, and about a month or so ago I put out a video with some trade ideas on the railroad stocks, and a lot of those railroad stocks just took it on the chin today. UNP down the line, CSX down over 10%. And so what I had said in that video is, you know, that these charts reminded me when I look at the transportation sector, I was highlighting all these railroad stocks as short trade ops back here on the breaks of these trend lines. And they did. I mean, if you shorted CSX, for example, you never really went underwater, stayed about break even, you got profitable. But this is what I referred to as the market. This is similar to the stock market, whereas I believe it got a stay of execution, if you will, a temporary stay of execution from Warden Powell, Jerome Powell. So that's I think what happened here. Now these charts are starting to play out. So the point is, these are and again, I'm just picking one railroad stock, but the technicals were priced in just like they were here. You had the breakdown, the correction. This time you had a breakdown, and you started to move down, but kind of more sideways because the Fed just came out with that max on dovish rhetoric recently, and I think that's what's happening. So we're starting to see it, and I think I believe it'll carry over to the markets because, as I said, nothing's changed in the longer-term technicals. So there's SPY on the daily chart. Here's SPY on the 60-minute chart again through today's close. Come in, we've taken out that first target there, minor support. These are all support lines. I'll zero in targets or maybe add some official targets if we had an active trade or an official trade on the indexes. But right now, the easy money, the big money's been made elsewhere. We're trading crude oil, commodities, natural gas, agriculture commodities, precious metals. That's where you're making in a few days what the market's doing in weeks or months lately. But as I've said, don't fall asleep at the wheel. Yes, we're in the summer doldrums, but just because this market has refused to go down recently, despite the clearly bearish technicals, doesn't mean they're not going to play out. Again, the charts have not been the negative divergences, the bearish developments all the way out from the 60-minute chart to the monthly chart have not been burned through, not even close. So they're all still intact. So let's look at the futures real quick. Or rather, before we do that, I didn't know it was on the index ETFs. Let's just finish up there. So there's QQQ and the big level to watch on QQQ. We had this period of multiple, about 4 failures there at the 190, 128-ish level. A couple more failures there, then we broke out. So that's a breakout in QQQ. Again, we broke down below the wedge, the uptrend line in QQQ. SPY, as I just showed you, this is a 60-minute chart here, and let's get to the futures now. All right, so this morning I had posted an update on rightsideofthechart.com, just static charts that we had broken down, not impulsively, down through NQ, but as I said, this level is pretty key right here, the 7907, because that's that same breakout to new all-time highs right there in QQQ and NQ. NQ are the futures. And so I said, although there's a breakdown, really not impulsive, and to be safe, you need to see that level go. Well, we closed right about on it at the 4 p.m. closing bell for the stock market, but I'm watching the futures continue to slide. We had a late day dump into the close on QQQ in the futures, and it's continued so far. And like I said, we have a very heavy earnings calendar and economic calendar, both this week and next. So if nothing else, I would imagine whether it's one company, probably more so a combination of various companies reporting, that's going to be the catalyst to finally get this market going to the downside. So that's it. Little spots along the way. I could draw a lot of support lines, but I don't see really much support coming in here to about that 77, 60-ish level. And from where we're at now, and again, this is move that line. It's already moved. I'll just try to drag from where we closed today. The market, that's about almost exactly about a 2% drop from where we closed today. So that's what we're looking for. And again, that would be my minimum target there. And with the futures, if we hold this breakdown here, and I don't see any reason why we won't, but if this breakdown holds, and again, that I kind of moved the line. It was at 79.07. It's a little lower now. I moved that line around, or a little higher. Then yeah, we should continue down there, and probably hit that level 2% drop. I could see it happening in a day or so, because once volatility finally picks up after you lock into that period of low volatility, the VIX hits low levels, gets back down to the bottom of its trading range as it has recently, boom, and that's when volatility usually spikes up. And again, stocks tend to fall a lot faster than they rise. So there it is, breakdown, and now the final near term, we'll call it, or near term confirmed sell signal I was looking for on NQ. And the markets really as a whole. As I mentioned earlier today, ES had already broken down, and when I did that last update in the video today, I did a midday video update with trade ideas. Start out with a update on the markets. That was for members. I said 30.05 on ES had to go. I'm sorry, I said 30.05 on ES already went. That already went today, while NQ was still at support. ES, by the way, right here, this is the S&P 500 futures. So we had broken out very similar to QQQ. We had check, several failed attempts there to break out. We broke out above that level, traded above it, came in and back tested it after the initial breakout and back test, and then finally failed it today. And I said that NQ would probably follow suit by breaking that what was that 79.07-ish level, which it did now. So that's it. Keep it very simple. Breakdowns in both NQ and ES, both below the trend lines, and finally again those recent breakouts to new highs. So that should carry ES down to some of these nearby levels. And again, there's a lot priced in the charts. Nothing has changed for the last 3 or 4 months. So will this be the catalyst for just a correction to some of these levels and then a bounce up to new highs? It's possible, but I certainly wouldn't, that's not how I'm going to position. I think there's a lot of potential downside in the market. So we'll need to see a little bit better sell signals on the daily. Like I said, today, again, what was that, about a 0.66% drop on SPY and only about a 0.5% drop on QQQ in the regular session. So not anything explosive, but at least it's a start. Okay, and a quick update on Iwm Small Caps. Again, I hit on these in the midday video today. The story on the small caps is we've been trading in this range since hitting my target. I had back in May, all the way back, when was that? Here's that chart. Let me pull it up. This was back here, May 28th. The dates are always time-stamped on the bottom. I had a max bounce target in Iwm of 156.20. I had this bullish falling wedge pattern, pending a breakout, showed us going and hitting these targets and then coming back down. So that was we were about less than 151 then. So fast forward to today, that was back in late May, and here we are now. There was the breakout. That's where we were at the time, right here, and you can see we went up and did indeed hit that target almost perfectly. We hit it and then had a what they call, or what I call, a selling climax, kind of quirky candle, shot up and then reversed right away. And ever since then, that's that same 156.56 target. Iwm has traded in a very, very tight and well-defined trading range between that 156.56 level and about 154. 32. And so where I'm going with this is trading range don't last forever. We closed right on the bottom of the trading range today. We had a little intraday whipsaw signal, but again, if we follow through to the downside tomorrow, if the futures, happen to build on tonight's the losses since the closing bell, or whatever happens. Remember, it's earnings week. We could shoot up, down tomorrow. You're going to see some volatility. We still have some big companies reporting in the next week or so. But that's what I'd be looking for here. So if we break down, as I said earlier today, I don't see much stopping IWM until it gets to about 150.80. So that's my minimum target right there, 150.80. If we get a downside break, an impulsive break, and or 60-minute close below that level, if we happen to break to the upside, obviously that's bullish. But these things can break either way. When you go into a sideways trading range like that, the indicators flatten out. They don't give you a lot of clues. You just have to respect which way it goes. And in a vacuum, I'd be ambivalent on this chart. It can break either way. But based on what the SPY, QQQ, with the large caps, the way they're postured right now, that's why I favor that downside break on the small caps. And then finally, trade ideas, that's for, subscribers of the site. But I never made this one official only because Netflix was reporting and only because it has such a history of big gaps. That's one thing I said today in the video, or on the site, one of the two in the trading room. I said, but the only guarantee I give you, this sucker is going to gap up. Or down tomorrow. It's going to gap one way or the other. And Netflix has just been a gold mine for us this year. For me personally, we've had 2 or 3 official short trades and several unofficial. Every time the stock has bounced back to this 380, 381 level, including this was an earnings miss right there, or disappointment, whatever happened. Sometimes companies will beat expectations. Just keep that in mind. So it's never about whether a company beats or misses earnings expectations. It's always about the market's reaction. That's the important thing. So not whether a company beats or misses. Sure, usually if they beat, that's going to give a rally. Not always. Sometimes it's priced in. And so in that case, that day, we were down here. Same thing. I was watching the stock for a shorting up on a break of that level and waited patiently. We kicked right back up to there, nailed the short entry, covered down there, did it again when it hit back up there again. Actually, we went all the way, rode that one down to my final target here, and then each and every time that it's bounced back there since, including the other day, last week, I mentioned that as an objective shorting up. However, of course, you had the earnings today, and it started to move down. This only reflects yet today's close. I'm looking in after hours. The stock is trading at 322 right now, 323. That puts it down here, right here. This is what the candle would look like right now if we had if we were trading in the after hour session. If that was showing right here, that's what the candle would look like, except red. And so obviously that's the N in FANG, F-A-N-G. Now I use the acronym F-A-M-M-G, or I'm sorry, F-A-A-M-G, because of Microsoft being the world's largest company. That's, FANG, there's no Microsoft, and that's the world's largest company, the only trillion-dollar company out there. So yeah, I think Facebook, Alphabet, Amazon, Microsoft, and those 5 are the big ones to watch. And I think today, let's see, they were all, let me grab another monitor here, 1 second. Yeah, I'm looking at a watch list on another monitor. All the FANGs were red. Microsoft, Amazon, Apple, Alphabet, both share classes obviously, and Facebook were all down red today. So that's it. Not much else to say. There's that last divergent high, last breakdown. Remember, sometimes these things, you get a little delayed reaction after a trend line breaks. That's what you had here. We back tested for a little while and then rolled over. And so now we have a minor uptrend line here. It was broke down and back tested, and we're starting to roll over. But again, there's a little bit of work to be done, and we'll just follow up tomorrow. See if we can add to the downside. Oh, by the way, one thing you want to look for is a bearish PPO crossover here on QQQ. In my book, divergence is only potential until you effectively put in a lower low on. Oh, sorry, hit the pause button there. With prices making higher highs, in other words, here's your negative divergence right here. Prices are making higher highs with the indicators making a lower high. Although the PPO is a momentum indicator, and you have two lines. You have the PPO line, the orange line here, and the signal line, the 9 EMA. And so when the PPO line crosses down below the 9 EMA, that, at least in my book, this I don't think it's ever I've never seen this in a textbook, but that's what I consider confirmed divergence, because effectively you have a lower peak. You don't have a lower peak until you've turned back down, because this is a momentum indicator, and as long as it's pointing higher and heading up, it can continue to go up, and then it can take out the divergence. So that's what I'll be looking for there. And you know, those high-level bearish PPO crossovers, they tend to be pretty good sell signals too. You can put up a histogram like this, PPO histogram, and you can see when the histogram goes from green to red, like right here, that's a bearish PPO crossover, especially when it happens at a high level like this. So this would be, if we get it tomorrow or sometime soon here, a high level bearish PPO crossover, and that would be the next sell signal on the markets. You can go back and see that, you know, sometimes you have the PPOs kind of choppy like this, but it's when you have clean separation. You had clean separation right here, high level bearish PPO crossover right there. You can see it on the histogram. Boom, big old drop right after that. We rallied up again, put in a divergent high, made another high level bearish PPO crossover right there, and boom, another drop. So that's what I'll be looking for. All right, let's wrap it up here. We'll see what happens tomorrow and into the end of this week. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.